Inflation is a silent thief that can rob you of your financial security without you even realizing it. It's a phenomenon that affects everyone, regardless of their age, income, or social status. It's the reason why prices keep going up, why your money can't buy as much as it used to, and why your investments may not be worth as much as you thought they were. But don't despair. There's hope. In this video, we'll dive deep into the frightening truth about inflation, and more importantly, we'll show you how to protect your savings and investments from its destructive effect. We'll discuss different strategies, tools, and investment products that can help you hedge against inflation and secure your financial future. So, if you're ready to learn the truth about inflation and take control of your financial destiny, then stay tuned. This video could change your life and your financial future forever. Chapter 1. What is inflation? Inflation is like a relentless wave, constantly pushing against the shore of your financial stability and slowly eroding it away. It's the result of a complex web of economic factors such as supply and demand imbalances, government policies, and global events, all conspiring to increase the cost of living for everyone. At its core, inflation is a measure of how much the prices of goods and services in an economy are rising over time. It's measured by tracking the changes in the prices of a basket of goods and services known as the Consumer Price Index. When the CPI goes up, it means that prices are rising and the value of your money is going down. Inflation can be insidious, slowly but surely eroding your savings and investments over time. It's like a thief that steals a little bit from you every day until one day you realize that your money is worth only a fraction of what it used to be. Chapter 2. Historical examples of inflation. Inflation is not a new phenomenon. Throughout history, there have been countless examples of its devastating effects on individuals, families, and even entire nations. From the hyperinflation of Weimar Germany to the more recent inflationary episodes in Zimbabwe and Venezuela, the impact of inflation on people's lives can be catastrophic. One of the most infamous examples of hyperinflation occurred in Weimar Germany in the 1920s when the government's decision to print more money to pay off its debts led to a runaway inflationary spiral. Prices skyrocketed, and people were forced to carry wheelbarrows full of cash just to buy basic necessities. The value of the German mark plunged so low that it became practically worthless, and the economy was plunged into chaos. In more recent times, Zimbabwe experienced a period of hyperinflation in the late 2000s, with prices doubling every day at one point. The Zimbabwean dollar became so devalued that the government had to issue banknotes with denominations of trillions of dollars just to keep up with inflation. And then there's Venezuela, where inflation has been running at an average rate of over 1,000,000% since 2018. The value of the Venezuelan bolivar has plummeted so low that people have resorted to using other currencies, such as the US dollar or Bitcoin, to buy goods and services. Chapter 3. The impact of inflation on savings and investments. We'll get to that in a second. I have a favor to ask of you. If you like this video so far, please subscribe to the channel. Inflation doesn't discriminate. It affects everyone, from the rich to the poor, the young to the old, and one of the areas where it can hit hardest is in your savings and investments. Think about it. If you've saved up $10,000 for a rainy day and inflation is running at 3%, then in a year's time, that $10,000 will only be worth $9,700 in today's dollars. And that's assuming you don't touch it at all during that time. For long-term investors, the impact of inflation can be even more severe. Let's say you invested $10,000 in a stock portfolio 10 years ago, and over that time, it grew by an average of 6% per year. Sounds great, right? But if inflation was running at an average of 2% per year during that time, then the real return on your investment was only 4%. In other words, your purchasing power actually decreased over that time, despite the apparent growth of your investment. This is why it's so important to factor in inflation when making investment decisions. You can't just look at the nominal return on your investment. You need to consider the real return after inflation has been taken into account. There are a few strategies you can use to mitigate the impact of inflation on your savings and investments. One is to invest in assets that tend to perform well in inflationary environments, such as real estate, commodities, or inflation-protected bonds. Another is to consider investing in assets denominated in foreign currencies, as this can provide a hedge against inflation in your home country. Chapter 4. How to protect your savings and investments from inflation. If you're feeling worried about the impact of inflation on your savings and investments, you're not alone. But the good news is that there are steps you can take to protect yourself and your financial future. One strategy is to invest in assets that tend to perform well in inflationary environments. Real estate, for example, can be a good hedge against inflation, as property values often rise in tandem with inflationary pressures. Commodities like gold, silver, and oil can also be good options, as they tend to hold their value during times of inflation. Another option is to consider investing in inflation-protected bonds, also known as Treasury inflation-protected securities. These bonds are specifically designed to keep pace with inflation, and the value of the bond's principal is adjusted for inflation over time. Diversifying your investments can also be an effective way to protect against inflation. By spreading your investments across a range of assets, you can reduce your exposure to any one asset class that may be particularly susceptible to inflationary pressures. Finally, it's important to regularly review your investments and make adjustments as necessary. Inflation rates can change rapidly, so it's important to stay on top of the latest economic trends and adjust your investment strategy accordingly. In conclusion, while inflation can be a frightening prospect, there are steps you can take to protect your savings and investments from its harmful effects. By investing in assets that tend to perform well in inflationary environments, diversifying your portfolio, and regularly reviewing your investments, you can safeguard your investments, you can safeguard your financial future, and sleep soundly at night. Chapter 5. The role of monetary policy in inflation. When it comes to inflation, monetary policy plays a critical role. Central banks, like the Federal Reserve in the United States, use a variety of tools to manage the money supply and control inflation. One of these tools is adjusting interest rates. When interest rates are low, borrowing becomes cheaper and more accessible, which can stimulate economic growth and increase demand for goods and services. However, it can also lead to inflationary pressures as more money flows into the economy. Conversely, when interest rates are high, borrowing becomes more expensive, which can slow down economic growth and reduce inflationary pressures. Central banks also use open market operations to manage the money supply. This involves buying or selling government bonds to increase or decrease the amount of money in circulation. When the central bank buys bonds, it injects money into the economy, which can stimulate growth and increase inflation. When it sells bonds, it reduces the amount of money in circulation, which can slow down growth and reduce inflation. Additionally, central banks may use reserve requirements, which mandate that banks hold a certain percentage of their deposits in reserve to control the amount of money that can be loaned out. By increasing reserve requirements, central banks can reduce the amount of money in circulation, which can help reduce inflation. Inflation is a complex economic phenomenon that can have far-reaching effects on individuals and society as a whole. It erodes the value of your money over time, making it essential to protect your savings and investments from its harmful effects. In these uncertain times, it is more important than ever to be informed and take action to safeguard your financial future. By staying vigilant and informed, you can protect yourself against the devastating effects of inflation. So, we urge you to take the necessary steps to protect your savings and investments from inflation. Whether it is through investment diversification, seeking expert financial advice, or staying up to date on economic news, every step you take towards protecting your financial future counts. Thank you for joining us in this video, and we hope that the information we shared has been helpful to you. Remember, knowledge is power, and by taking action today, you can secure a better financial future for yourself and your loved ones.